Hey, it's Mack with PriceActionTradingSystem.com, and this is Tuesday. It's May the 5th, uh, Cinco de Mayo for our brothers across the border. But anyway, the first thing I want to talk about this morning before we talk about anything else is the CQG data. Um, I've gotten just bombarded with emails from it. Most of it's been real helpful. I appreciate everybody uh, stepping in and trying to help figure this out and figure what we need to do. But I would ask that you please not send me any more emails or information because we figured out, we know what's happened, we know what's going on. There's nothing wrong with the data. I want to say that again because that seems to be the biggest concern for people is that they think something's wrong with the data. There's nothing wrong with the data. It's just coming to us in a different format than it did before. And you can still use tick charts. We just have to adjust the size of them. I traded a tick chart all day yesterday. I traded one all day today, and everything was fine. Um, we just got to figure out where the sweet spot is. Used to be it was 2,000 ticks. Well, now it may be 500 ticks. It may be 800 ticks. It may be 1,000. Uh, it may take a while to figure it out. But for today, yesterday I traded 500. Today I traded 500 early and then switched to 600 later in the day. And Sim traded some on the 600 as well. And on into the afternoon, there's nothing wrong with the data. So make sure you understand that. Don't be afraid of the data because all of the other data providers will have to make this same change too. So they're all going to change as well. So be prepared. I don't know when, but there's some kind of deadline, and this is something the CME themselves is instigated, and they're going to require all the data providers to switch over, and CQG is just ahead of the curve. They're the leader. So there's nothing wrong with the data, and we'll say that again. Nothing wrong with the data. You can trade it. Um, you could even trade a 2,000 tick chart. You're just not going to get many setups. You could trade a 100 tick chart. You're just going to get too many setups and a lot of more that fail. The reason we picked the 2000 originally because that was the sweet spot for what we wanted. You got enough trades without getting too many, and you didn't have too many failures and this and that. I mean, it basically was the ideal place to trade. It gave you enough time to figure out what's going on. You don't want it to move too fast, but you don't want it to move too slow either. And you want to, you don't want your bars to be so large you can't trade them and things like that. So we got to find the sweet spot. That's what we're working to do right now. But again, there's nothing wrong with the data. Um, we'll figure out what we need to do as far as the tick chart size. But if you would, just please hold any more emails because I've already gotten about 100 today. People talking about, different things about, most of them are people worried about trading the data and what are they going to do. But there's nothing wrong with the data, so don't worry about that. If you're not comfortable, feel free to switch to another data provider. But you're going to go through this again down the road, so you might as well bite the bullet and make the change now. And because I don't think it's any big issue, to be honest. The only issue is we got to do some experimenting to find the right chart. But past that, the data is good, the trading is still good, everything will still be fine. So, but this is a 5 minute chart, and this is why I don't like a 5 minute chart. It really didn't from about the open on down. You can see it. There's some trading in there, but you cannot see the same details you can see. I mean, that's just like a big hunk of trading range right there. And if you go, when you look at the tick chart in a minute, you'll see there's a whole lot more details in there than what you can see there. And look at the overnight stuff. There's nothing, there's no way to trade that really. That's like junk. But if you go look at, when I'm going to show you the tick chart, you'll see here's the 500. You can see even the overnight data. You can trade that very easily all the way down. And then But in the end, I believe I want to settle on that's the 1,000 tick chart, and it looks really, really nice. And you can see even the overnight data is tradable, and look at it all day long, it's tradable. And this looks very, very eerily similar to the 2,000 tick chart. So I'm going to watch this one tomorrow and see what comes of it. But let's go back to the one that I marked up, which is the 600 tick chart, and let's talk about the trades. And you'll see the same setups we see every day, all the time. They're all here. So, um, but I'm going to back out just a little. The only thing is this just looks like quite a few too many bars, so I think it's a little bit too small. I mean, it's very tradable, and it doesn't move too fast either. I kind of like it. I mean, I'm going to continue to watch this, and it may be that we like, even though the 1,000 tick looks more like 2,000 normally, it may be that we like this one better and we switch to this one. We just have to kind of play it by ear and see what happens. So, but anyway, let's talk about the trades. The first trade I saw this morning, this looked very much like a trading range. We had a failed break higher. You know, here's your high and your low early, and this is really your overnight high and your overnight. Well, actually, your overnight low is here and here, and so it looked real. Regardless, it looks real rangy early on. It didn't turn out to be a range day, but it looked that way early on, and we had this working down. We actually had one working up, and we were looking like we were going to try to make a retest. But by the time 7 o'clock came, we had this failure. And look at that big bearish bar. It's basically a double top that's lower than that last high. Um, the EMA is kind of pointing down. We're kind of working down. That's a nice setup to go short on. I like that for a short off that lower double top than the last high. And you're just looking for a scalp, or initially, but this one turned out to be a heck of a move. It's right at this 7 o'clock hour, so you may not have been in here. Actually, no, that's actually into the 7 o'clock hour, so that's not even too early. Most of you, that start trading at 7. If you're like me, I start around 7 every morning. Um, that was a really good setup there. And there's actually a trap here, but it was too early, in my opinion. I mean, I wasn't, just see what time that was. You can see that's 6:42. I wasn't here yet, so I didn't get here. We were making this move up when I got ready to trade, basically, and this was the first setup. It's working down. I don't see any other opportunity to end this. This looked real rangy, so you expect there's a breakout pullback short there, but it's just not a good enough setup to want to take. And then it bounces. Notice that new low right there. You get a pullback first entry, pullback. That's a failed second entry short. And notice what happens here. Prices, and you draw that trend line right up through there. And you get this, it breaks below this bar first, turns, it goes out the upper side. Just go long right there. And off it goes. This was a great setup. It pulls back a couple more times. I didn't like any of these setups. They look there's too much stem. We're finding too much resistance right along here. They would have worked, and they're off the trend line, but looks like you possibly got a break. Originally, I didn't have that break. I had it right here. But as I got more price action up here, I adjusted it. And then when you adjust it here, as you work your way up, it looks like to me that we had a close outside right here. And but you really probably wouldn't have been able to see that until you got this swing right here. And then it kind of confirmed it when it turned off of it up there too. It was really tempting to go short here, but I wasn't 100% sure on this break here, so I felt like it was better to wait. Then you get a second entry that sets up right here, but notice this bar can't break below it. Instead, it turns up, and look at all that overlap. We're trying to make a retest on this, is what I think people were thinking, and you just kind of hung up there, and it breaks higher. You definitely don't want to be going long up here, um, simply because there's just, look at all that resistance across there, and this is like a failed break. It was really tempting to go short there, but I think you want to wait on the second entry and another trap. And when it broke higher here and turned back down, same thing, just have your stop waiting right there and look at it go. And you're looking for it to come down here, and it looks like it's going to hang up right there, but it just keeps on working lower. And I don't see any more entries down here. I don't see any other way to safely enter this. But this was a second. This is a form of a second entry short. It's a little bit congestive looking, but we were still kind of making lower highs or higher highs and higher lows until right here, and that kind of set it up and let you know, hey, something's not right. We're not able to break higher anymore, and you get this lower double top. This is almost very similar to here, just a much more compact pattern. There's that high and the lower double bottom. There's that high and the lower double bottom. And so, again, if you did enter here, it would have worked. You would have had to write all this out. But there's just too much overlap. And that's like the little failed break higher, and then it tries to go higher again. And so, especially with that big bullish bar, when it broke higher, you trapped people. And that turned out to be a great trade. And I just don't see any other safe way to enter that. It still was looking really rangy because when you drew this line here and drug it up, it just didn't fit very nicely. I was thinking, well, hey, maybe it's up here, but then we kept coming up short, so I don't believe it was. I think it's down. It's down here, and that you actually had a break. But that fact leads me to something else here. What I think happened today is that we had this channel working down, but we had a break early on and a new low, and then we had a correction right here, and we started a new downtrend here, and it was a little bit steeper, and that's the red channel, and you can see that working down. And so that's what I believe happened, and that's not uncommon. We've seen that before. Somebody else sent me their chart and showed me they saw it too. So but I think that's how you explain that, because I think you've got a channel working down here. This is another thing that I didn't talk about a minute ago. There's your first leg down, and then your second one started right there. And so that should have helped you stay in that trade on those little pushes up there until you got outside, maybe out. But notice that we went a little further than that. So the market's a little weak, but we did correct from there. It was tempting to go long here, but I just wasn't sure about this channel yet. So, but when it turned down right there again, that equal distance, then you have to think, yeah, I had it right. So, but the next trade I saw, again, it was really tempting to go long in here, but I think you were better off to wait. You get a short here. Notice that little channel working up. You get a close outside, a move to a new high. And where does it turn down? Right off that channel line again. So that's a second entry short and another really good trade. And it pulls back. There's a big bearish bar right here. This would have worked. And again, this is similar. Notice those two little matching highs. That's another high and then a lower double top. So there's some reasons to consider that trade, but the EMA was flat here, and this was starting to look a little rangy. So I didn't feel it was worth risking it. It would have worked, but it did bounce again, and that's what I was kind of suspecting. And then again, it was almost tempting to go short there. It's a nice setup bar, but I kept, correct higher, but this thing kept holding. Look at it hold again on that bar, even though that's your part of your original move down. But when it broke higher again right there and turned down and went out the other side, just go short right there, because now you know something's going on. And then you get a failed second entry long right there. Notice the new high, it pulls back. first entry, pull back, second entry, it fails, just go short right there, and another good move. And then it actually gives you a little breakout pullback short right there, right off that trend line. And that's three really nice trades in a row there. The kind I like to add on to. I don't know if I would add on here, but if I wasn't in here or I exited, I would re-enter right there. But I don't think I would add on a third set there. Um, you could, but generally I won't add on more than a set. Every now and then I'll add a third set. It's a really good setup. Um, but the market, this is still looking a lot real rangy, and I don't think it's worth risking right here. Another one, even though it is really a breakout pullback short, and because we've already had a failed second entry long, and so it's just a little bit risky. But it turns out to be a great trade. Let me clarify that it's a little bit risky for an add-on. If you're already in a trade, I wouldn't add on here. But if you're not in one, I think it's worth entering there. And then comes down, you get your break, and it heads lower, you get a new low, and I just don't see any reason to enter down here along that trend line. It does push lower, but I don't think it's worth entering. And then um, at this point, we got an overshoot. So even if we didn't have a break up here, when you get an overshoot on this side, you're very likely to the trend is over in most cases, and usually a lot of times you get a reversal. And so I felt comfortable going long. And notice this low, this overshoot, pullback first entry, pullback second entry, it fails. And we saw that pattern up here earlier somewhere right here. It's like a repeat pattern again. Um, this was tempting to go short, but the fact that we overshot this down here and that we've been trending down so long, you got to be careful of it. If it was sitting there by itself, I'd probably would have went short there, and it may have even worked. Let's just see. It's such a good signal bar. Entry would have been 92 and a quarter, and it would have been a 4-tick failure on my chart. So doesn't mean you might not have gotten out, but notice 1, 2, 3 bars overlapping. One of them's a doji. That's not a good signal, so I felt it was better to sit tight and see. Figured you're going to get a trap right here, and that's exactly what happens. It goes higher, pulls back, kisses the earlier midline, and heads higher. And so I liked it to go long there, thinking that, hey, we're going to revert finally. But we make a lower high, and like, So, but you overshot it here, so that, the market even equal amounts. That's why you get measured moves and things like that. So if it overshoots it here, it's probably going to undershoot it. But you also had to take into consideration that maybe this is a new trend because we had the break and new low and a correction here on this one. Yeah, that's the correction. Once you get a break of a trend line and a new low, a correction doesn't mean it reverses, although a lot of times it does. It means the market's not going lower or more. And that's what happened right here. It didn't go lower really till right here, and that's over. So anyway, I like going long on those. And now you're working lower. You made a lower high. You couldn't get back up there. So you just got to be careful about going short too. It's really tempting to go short right there, and it would have worked. But I think you got to wait, and then you get the failed second entry long there. And so now you can go short, and you still get all that benefit all the way down. And you didn't have to risk going long with prices still above the EMA. Notice how they push right. I mean, when it drops through like that and pulls back, pretty good sign. And that's a pretty good reversal bar. It didn't close perfectly on its end. You might have thought about a limit order, but I'll tell you, on days like when it starts moving well, you'll get left behind on some really good trades sometimes. So I probably just would have used a stop. If I did use a limit, it wouldn't be more than a tick in or right there at the bottom, because I don't want to miss those trades. and then we make a low, we pull back, first entry, pull back, second entry. But again, I was looking for a possible reversal, so I waited on the trap, and it went higher, and then turned down and went out the other side. And when I saw that trap there, you got to go with that one, and it's another quick, easy move. And then it bounces again. And what happened earlier, we made that new low and we went into a range. So this is kind of a repeat pattern. We made the new low, we went in. We don't have a break of this one yet, so it's not exactly the same. But after, a couple of legs down, we kind of go into a range. And so when we made the double top right here, it looks very similar to that again. There's actually a trend line with a break and a move to a new high, just like this. You can see that right there. Um, you get a close outside. It's a bullish looking bar, but it's outside, and you get your new high, and it turns down. But that's not why I like that short. I like that short because it's a double top in a fairly strong downtrend, and it's looking like a range. You got a double bottom, now you got a double top. We're probably coming to the other side. That's exactly where it goes. And then there's a breakout pullback short that was tempting, but it's not a very good signal bar. This one was, but then it's moved too far. It's too big a risk. So you just got to watch that one go. And that got you into the 2 o'clock hour and not much else happening. So, but yeah, some really good trades on this chart. You can see the setups are there. The same thing I talk about every day. There's no problem. You can still trade this stuff. The data is fine. It's not going to change. Nothing to fix. Maybe they find, who knows down the road, maybe they say, hey, there's something we need to do to make the ticks a little different. But I don't think that's going to happen. I think what we have is what we're going to end up with. And so I think you're worried about nothing if you're worried about the data. And if you are, switch over to one of the other ones, but you're going to have to go through this with them as well based on everything I've heard. So, yeah, I think we've beat that horse to death now. So, um, but a good trading day with either the 500, the 600, oh, that was the 600, I'm sorry, or the 500. You see, it looks you can't even hardly, just glancing back and forth, you can't even hardly tell the difference. There's just a few more bars with the 500 than there was the 600. And in the end, I really like the 1,000 tick chart. And so I'm going to look at it closely tomorrow morning and possibly trade it. But I'm going to keep an eye. I may decide I like the 600 better and stick with it. And, we might even find something in between there that we like better. We'll just have to see and experiment with it. And because the market changes, from day to day. Well, some days the volume's higher than others, so it may take, you may not can figure it out in a day or two. What works one day tomorrow may be all different, and you may want to change. And eventually, you'll find the one that fits the best, and that's the one we'll stick with. And once you get used to looking at it, then you can just tell by looking at the bars and the way the chart's forming how the volume is. You see, everything you need to know is in that price action. You don't even need to know the volume, because once you are familiar with that chart, you'll know what the volume is based on what that chart's doing. You won't need something down here telling you that. It just gets in the way. But that takes time and experience, and we don't have enough time and experience with this new data yet to necessarily know that. So we've got to play with it for a while and get used to watching it and spend some time and just get skilled with it. Just part of trading. This is not happened to us in the past, but it's happened now, and it could happen again in the future. But just don't let it get you worried. Don't be worried about the data, the safety of the data. It's fine. And like I said, I'm gonna look at the 5, 6, and 1,000 tick chart tomorrow, and I may, hey, if I don't like all three of them, I may even open an 800 real quick and look at it. We might decide I like it better. So, but I think you're fine. I traded the 5 and 600 tick charts, no problems with any of them. Some really nice. If you go back and look, here's the 500. There's some really nice signal bars on this chart. There's a great signal bar. That's a pretty good signal bar. A good one. Look at that one. I think we just talked about that one. There's, a couple going up. But yeah, there's some nice signal bars here. And even though that looks like a doji, that's a pretty good signal bar because it's traded way up here and closed way down here. And I like these little dojis occasionally. You got to be about a doji. They can be good setup bars or bad setup bars, but the smaller they are, I often like them because it allows you to get in. And a lot of times they form at swing, where the swing reverse is at. You'll see a little doji sitting up there quite often, but you have to know what you're looking at because you don't want to get hung up on the wrong kind of doji. There's one that formed before it swung up, and now look at that signal bar. It's a great signal bar. But I think then later on in the day, there were some really good signal bars on this 600 one. You saw them. So, we'll figure it out. Don't worry about the data. If it does bother you and you want to switch, switch over, but you'll probably still have to go through this regardless sometime between, I can't remember what the date was. I heard October maybe or something like that. But at some point they're all going to have to switch, so just be prepared for that. But anyway, I'm going to wrap it up for today. It's almost 30 minutes worth. We'll be back again to do it tomorrow. And this is Mack with PriceActionTradingSystem.com, and we'll see you next time.